Today, I want to show you a chart that proves AMC is about to squeeze. I also want to talk about how the same shorts shorting AMC and GameStop are currently stuck in a short squeeze on MicroStrategy. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Noctis Research tweeted saying this is my favourite chart of all time, the GameStop off-market selling imbalance. And he said this chart shows the equivalent of 200% of the shares outstanding. Now, in a second, I'll go through this chart and explain what it's actually showing and how we can also apply that to AMC. But he finalised by saying short sellers really are the dumb stormtroopers of the galaxy. Who said that again? That's right, Ryan Cohen. So what this chart is showing is the GameStop selling imbalance between 2017 and 2024. Basically, the imbalance of shorts and sell orders compared to buys or buy orders and short covering. So on the right axis here, we have the stock price obviously being very low through 2017, 18, 19, 20 and 21, increasing through 2021 during the GameStop initial run up and pulling back since then. Obviously, on the bottom axis, we have time or the date through 2017 all the way to 2024. And then on the left axis, we have the cumulative imbalance between shorts and sell orders and buys, buying to cover and buys going long. So what this chart is showing us is there was tons of selling pressure through 2017, 18, 19, 20 and just into the very start of 2021. Around 250% of the float sold short, or 250% more shares sold than what actually purchased new shares going long and purchased shorts covering. Then obviously at the start of 2021, we had tons and tons of buys, which obviously caused the price to explode, that initial run up. But since then, we've seen tons more selling than we've seen buying. Obviously, how the shorts are pushing the price down. But what's interesting is we've currently seen around 175% more shorts and sales than we've seen buys and buy covers. Basically suggesting that on GameStop we've got 175% of the float shorted through off-exchange and on-exchange trading. But it also shows us the price has decreased not due to retail investors selling, but due to the shorts pushing us down. The shorts selling more shares, the shorts selling tons of shares, and the shorts selling more shares than should actually exist. More shares being sold than what's in the float, and more shares being sold forcibly by the short sellers than is being sold by retail, and is obviously also being bought by retail as well at the moment. Now obviously this is the chart for GameStop, but I imagine the chart for AMC looks just the same. In fact, I'd imagine a little bit less selling on AMC prior to 2021, but probably more selling by those shorts and those hedge funds to ensure the price of AMC stays suppressed. I'm sure it would also prove that more than 100% of AMC's float is sold short, similar to the OBV chart, and it would also show that shorts have been pushing us down time and time again. And it would also show the only reason that both GameStop and AMC haven't yet squozen in the squoze or squozen in the squeeze is due to the shorts selling more than 100% of the flow. I also wanted to quickly touch on today or yesterday's fast-moving momentum news play on GXAI. We saw the run-up and pre-market high at $10.97. We then waited for the breakout of that pre-market high to use the breakout strategy, where we rode the stock for 62% gains. You can see today Foxy Grandpa locked in $4,056 just on GXAI. John Crocodile, in his first day in the Millionaire Mindset Trading Group, is already locking in solid gains, and today Doc Holliday locked in a 400% gain on Alibaba. So guys, if you want to be making 400% gains, be sure to join the Millionaire Mindset Trading Group using the link in the description below. Now, speaking of which, Glenn tweeted saying he found this little nugget on MicroStrategy, or MSTR, which is the crypto-based stock that's run up massively over the last few months, from around $200 to $300 per share, over $1,600, $1,700 per share. So it says, as a comment, he's still monitoring this as of today because there's still a large hedge fund trapped with short interest on MicroStrategy of roughly 17.65% of outstanding shares. aka one short seller is currently shorting nearly 18% of the MSTR flow, and saying that short interest has barely dropped since the gapping of MicroStrategy between $448 to $1,246, putting the cost to cover somewhere between $1 to $3 billion, depending on their source of collateral. And he said, it's clear to me they either have to buy MicroStrategy shares and call options or fire sale off another asset to get out of this situation. Personally, I think if they wanted to exit, they would have done so already, seeing the spot ETF inflows on Bitcoin, which suggests someone is stuck. If a short wanted to get out of this short position, they would have closed out at $500 or $600 or $700 per share, especially seeing Bitcoin running up to new highs and the inflows into the Bitcoin ETFs. A smart money hedge fund wouldn't have stayed in this short position, seeing all of this inflow into Bitcoin, all of this inflow into crypto, all of this inflow into the ETFs, and with Bitcoin hitting new highs. They would have smartly closed their short position on the cheap while they still could. Now, Sith Balsakis has actually gone one deeper to find out which hedge funds are currently shorting MicroStrategy, and it's the same hedge funds currently shorting GameStop and the same hedge funds currently shorting AMC. Those funds currently shorting MicroStrategy are Susquehana, IMC Chicago, Citadel Advisors, and Graham Capital Management. Now, Graham Capital Management doesn't ring a bell, but these first three certainly do ring bells. So it seems these same hedge funds currently shorting AMC and GameStop are currently in a very sticky situation, shorting MSTR. Now, I also wanted to quickly touch on whistleblowing. You may have seen from a recent news article that there was a recent whistleblower on a very large aviation company. Now, just a few days later, he was found either self-deleted or deleted by somebody else or just disappeared. And as Kevin tweeted, he said, here's the SEC whistleblower website and the whistleblower whistle if anyone else feels like getting self-deleted this week for doing the right thing. There seems to be quite a common theme recently of whistleblowers and then all of a sudden a few days later them turning up disappeared. As Retail Stocks tweeted, he said, remember when a Goldman Sachs analyst said AMC should go to $100 per share and then was found deleted a few days later. Similarly, there was a judge's husband and son deleted 4 days after a judge received a specific assignment on this case. The Bed Bath & Beyond CFO also self-deleted himself after being accused of insider trading in a possible pump and dump scheme. Obviously, we had this large aviation company and their recent whistleblower incident, and also an executive from Enron also deleted himself a while ago. So it seems there's a lot of whistleblowers recently that turn up disappeared just a few days after blowing the whistle, and this most likely is why more people haven't blown the whistle on these hedge funds and market makers like Citadel. Not because they don't want to do the right thing, not because nothing wrong is happening, not because they don't know what's happening, it's because they don't want to turn up disappeared a few days later. Now, Peter Han also touched on what I spoke about in my video the other day about how AMC can easily renew its debt. He posted on LinkedIn saying, I'm going to leave this here. He said, tell me again how this company is a bad fundamental play. Please don't tell me about the 2026 debt maturities, because in February 2022, AMC had a $500 million debt issue mature, which was easily rolled into a $950 million debt instrument maturing 2029 at 300 basis points below the maturing issue. AMC managed to raise more money at a lower interest rate because there was tons of funds begging to give AMC money, as they were so confident they'd receive their money and interest back and that AMC wouldn't default. Asking would creditors be willing to lend additional funds beyond 2026 at a lower interest rate if they thought the debt maturing then would also not get rolled. He said, "I've posted ad nauseum about abusive naked shorting on this stock, the constant daily spoofing in the level 2s by Goldman, Citibank, B. Riley and others, and about the strong likelihood that FTX and Binance stock tokens were used as locates by brokers to short the stock, all things I've covered in my videos over the last few years." And he's even more repeatedly complained about the large size and consistent nature of AMC's FTDs in 2021, 2022, and even more so in 2023. And finally, he's asked where the hell the SEC and the Department of Justice is in at least making a statement about the irregularities. You have to remember, it's not just me, Thomas James, that's been saying these things. Peter Han, a fixed income portfolio manager, and with many other qualifications and backgrounds over the years, has been saying the exact same things. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.